We have a tough act to follow after the last panel. I think, it was a substantive discussion, but very entertaining. So I am going to promise to keep this a little more serious, to just remind ourselves just how serious the issue really is. But, the previous panel is so accomplished that, we can let them have fun with the topics. So thank you. And I apologize for not having more women on the panels. It's something we will definitely fix next year. It's completely my fault.
So, and Pratibha, may I just interrupt? We have Uday Khemka here as well. He's one of the leaders when it comes to climate finance.
I know. Thank you for coming.
And he just let me know a couple of days ago that he's available also. I think we should invite him on the panel. Please come, Uday.
Can we arrange a chair?
Yeah, of course we can.
Yes, please. Thank you. It would have helped if Mr. Khemka was a woman, but...
Well, my inner woman. Let me tell you about that.
Yeah.
I can tell you when I come from in Berlin, all he needs to declare his intention. If he feels like it's okay.
We can keep it him in power.
I'll give you my pronouns in a minute.
Yeah, let's put it there because we want to keep it with the photos. Sorry.
Okay.
We can have...
You can do it. So...
Okay, so I have an amazing panel with us today. We cut across policy, politics, finance, and people who've actually built businesses that have delivered and delivered profitably to show proof of concept for what we are talking about. I think that is the most important aspect of it, as Johan was mentioning in the previous panel, that it's about doing good, but ultimately you also show, and these gentlemen have shown, that this is also about economics. Ultimately, we will see that the returns, and Johan was mentioning this, that the borrowings for US is much higher than for Europe, on the back of the green growth that they have been financing. And that's the future. And these gentlemen in India are really, putting the money to the discussion that we are having. So on that note, let me introduce the first panelist, Mr. T.G. Bharat, who's the Honorable Minister for Industries and Commerce, Government of Andhra Pradesh. He is going to start with a keynote address on behalf of the Chief Minister of Andhra Pradesh, Mr. Chandrababu Naidu, who was originally supposed to be here but couldn't make it for certain important conflicts. Andhra Pradesh is a state that Mr. Naidu is visionary Chief Minister who has really led from the front, not only welcoming businesses into the state, but creating a very positive environment both for business and climate-driven businesses. And therefore, we are very lucky to have Mr. Bharat to give the keynote speech on behalf of the Chief Minister. If you please, sir.
Actually, Chandrababu Naidu Garu was supposed to come, but I think it was in the last minute that he couldn't make it. It was some other arrangements that he had to go. So I'm just representing our Honorable Chief Minister Chandrababu Naidu Garu here, and took the notes from their team, and I thought I should share what his thoughts are there. So ladies and gentlemen, it is a privilege to be here at Davos and address this distinguished gathering. I speak today under the leadership of Honorable Chief Minister of Andhra Pradesh, Sri N. Chandrababu Naidu Garu, whose governance philosophy has consistently emphasized long-term vision, technology-led development, and institutional credibility. This approach strongly shapes how Andhra Pradesh thinks about growth, resilience, and investment. In Andhra Pradesh, resilience begins at the planning stage. Let me begin by simplifying what climate resilience and regeneration mean to us in Andhra Pradesh. For us, this is not about slogans or distant targets. It is about how we plan development so that growth continues even under stress. Whether climate-related, economic, or global, under the Chief Minister leadership, resilience is embedded at the planning stage. We integrate land use, infrastructure, energy systems, water security, and ecosystem considerations together under statutory planning frameworks with a long-term horizon of 25 to 30 years. This approach is especially critical for a coastal state with more than 1,000 kilometers of coastline, where climate risks directly affect infrastructure, livelihoods, and investor assets. For example, when we develop industrial parks and corridors, we do not simply allocate land. We plan power availability, water security, logistics connectivity, and climate safeguards together right from the start. This ensures that industrial assets operating for decades remain stable, competitive, and protected from future shocks. That is how long-term asset value is preserved. In clean energy, ours is a central pillar of our development strategy. Under the Chief Minister's vision, Andhra Pradesh is building clean energy at scale, not as standalone sector, but as core economic infrastructure supporting industry and cities. Under the integrated clean energy roadmap, we are targeting around 160 gigawatts of clean energy capacity across solar, wind, and pumped storage. This represents an investment opportunity of nearly USD 120 billion, with the potential to create over 750,000 direct and indirect jobs. For industry, this scale matters. It provides long-term access to reliable and affordable power, reduces exposure to fuel price volatility, and improves the global competitiveness of manufacturing assets over their full life cycle. When clean energy is planned alongside industrial corridors and urban development, it strengthens resilience and significantly enhances investor confidence. For us, nature is not separate from infrastructure, it is part of it. Andhra Pradesh has extensive mangroves, wetlands, and natural coastal buffers, which we are integrating directly into port-led industrial corridors and coastal urban development. These ecosystems protect ports, industrial zones, and cities from storm surges and flooding, while also supporting livelihoods and local economics. When nature-based solutions are planned as part of economic infrastructure, they reduce long-term damage, lower maintenance costs, and protect asset value. That is how nature becomes scalable and economically rational for long-term capital. The core role of government, as Honorable Chief Minister consistently emphasizes, is to reduce risk for long-term capital. Long-term investors are willing to commit capital for 20 to 30 years, but they need certainty, clear land, stable policy, reliable infrastructure, and predictable timelines. That is where government plays its important role. We do the hard work upfront, land aggregation, clear policies, time-bound approvals, and assured access to power and water so that private investors can focus on execution, innovation, and scale. When uncertainty is reduced, capital inflows naturally. Execution, credibility, and transparency forms the core of our policies. This approach is already delivering results. Projects in Andhra Pradesh are moving quickly from intent to approval and into execution. This is not accidental. It is the outcome of governance systems designed for speed, transparency, and accountability. Driven from the top, digital platforms like Aware provide real-time data and early warnings for climate and infrastructure risks, allowing government to respond faster and more transparently. For investors, this means risks are visible, monitored, and managed, not hidden. Transparency builds trust. Our message to global investors is simple and direct. If you are looking for a partner that offers long-term integrated planning, clean energy at scale, nature integrated infrastructure, policy certainty and speed of execution, and leadership committed to reform and delivery in Andhra Pradesh under the leadership of Chandrababu Naidu Garu, is ready to partner with you. We are not seeking short-term capital. We are looking for long-term partners who want to create durable value over decades. Let me conclude with a belief that guides our approach to development and governance. Growth that is resilient is growth that is investable, durable, and future-ready. Thank you.
Thank you so much for that. I think that's a very clear roadmap that the Andhra Pradesh government has, put in place, and almost there's a red carpet for climate investors. So that is very, very encouraging. Thank you so much. I'm going to bring in the rest of our panelists at this stage, and let you introduce your work yourself, along with the question on the first time actually I heard about regeneration versus mitigation was in this room last year with PDIE leading the discussion, and I'm thankful for that. And I realized the importance of regeneration versus mitigation because it's no more just about carbon constraints. We are seeing that lives are getting affected to an extent that we have never seen before. We are seeing Earth getting affected to an extent that we have never seen before. I think the human civilization is at stake, and the conversation we are having is therefore that important. And at Eversource Capital, we've been able to raise India's largest climate impact fund. And now we're in the stage of raising our second fund. And based on the first, $700 million plus that we raised, we've been able to generate billions of dollars that have gone into the Indian climate sector. If you add up all the equity and debt we've raised on at the portfolio company levels too, based on the initial 700 million. And out of that, in our initial 700 million, it's the concessional capital that we got that got us to, start raising the rest of the capital. So really, the model for capital raising, we've seen firsthand how it impacts what you're able to do in a society. In fact, we've built businesses from scratch that didn't exist, but the demand existed. For example, we have the largest fleet of EV buses that run in the country today. We have largest fleet of EV commercial cars that run in the country today. So the importance of raising that financing, I just want to understand, what you have seen as models that work in your businesses, and where are the constraints? Because, as we raise the second fund, we are also seeing the constraints. But really wanted to understand from you, where you see the constraints and where do we go from here in terms of not just mitigation, but regeneration. Mr. Khemka, if you can introduce yourself first.
Sure. My name is, firstly, thank you very much, Jayant. I thought I was coming to sit in the back row. So I'm delighted to be with such distinguished company, but extremely surprised, and it's an unexpected honor. Delighted to be here. My name is Uday Khemka. I'm vice chairman of an Indian business group called the Sun Group. It's a 120-year-old business group. I head up our energy transition division. I see some friends in the audience. I also have been the managing trustee of a foundation that has focused on climate change and the energy transition, actually more climate change in the first decade and a half, since 1992. It's been a long 33-year-old journey. I'd rather actually answer your question, if I may, at a more systemic level. But nevertheless, I want to first start by congratulating you at Eversource, because you really are the flagship for the country in what you're doing. There are other earlier stage venture firms and so forth. Congratulations on what you've achieved. It's really something to be proud of. And I wish you going from 2 billion to 20 billion within the next 2, 3, 4 years. And encourage everyone here. I'm going to get in trouble with the SEC. I should say I've got nothing to do with them, so I'm allowed to say all these nice things. Okay, good. Now, that having been said, the real problem, I've been working with sovereign wealth funds and pension funds through our family foundation since 2005. First with a group called the Pension 8 with King Charles, and then with a group called the Institutional Investors Roundtable. All of these are sovereign or sub-sovereign funds. And the idea was to get them together to look at how to invest in green infrastructure and co-invest at scale. As you know, these huge asset owners come through funds like Eversource and sometimes invest directly into platforms. The question was, why couldn't we increase? As you know, we need an extra $1 trillion a year into developing countries. Why can't we get there? Or Jayant always talks about the 100 to 200 billion that we need extra from international markets. And he and I talk often about this, because the issue is, quite rightly, the minister said, and I really appreciated your comments, because what you said was absolutely spot on, that what we need is long-term capital. And the good news is there is a lot of long-term capital. Pension funds, sovereign wealth funds that are not looking for venture investment returns or private equity. They're looking for yield. They're looking for steady growth. And there's a huge amount of it. And it hasn't found enough investable infrastructure opportunities to manage to balance the pension profile of its obligations and liabilities. So India offers a fantastic opportunity. So why not? And the answer, I think, is the same all over the world. For many decades, I thought it was about bringing all these institutions together and getting them to co-invest and learn. And I realized that I'd been incredibly stupid. It's nothing to do with that. It's about de-risking the environment. And de-risking in the way the minister said, very importantly. And so after 20 years of work, we are suggesting, and I can talk about it later because I don't want to hog the airtime, a 3x5 framework, 5 stages of de-risking, and bringing institutional investors, including fund managers and asset owners, together with industry, together with government, to de-risk in a very systematic way, sector by sector, state by state. And we can come back to that if we have more time. That reduces the perceived risk, that reduces the real risk, so that the available returns match the asset requirements in terms of risk-adjusted yield.
Yeah, and that requires long-term capital.
And it requires an engagement with the real economy and finance, not just finance or blended finance. Thanks.
Mr. Danti, if I can just modify that question a little for you in terms of, what is a public-private partnership framework that we can look at especially for renewables, since you're in that space for financing and growth?
Sure. Just before that, firstly, I just wanted to share my thoughts on Andhra Pradesh. I think since the minister is here, we have been active for the last 15 years since Sir's first term. And, Chandrababu ji kind of is so passionate about renewables, and he got us there and said, let's make it happen. What do you need? And let's kind of get it cracking. And I think since then, the kind of work that we've been able to do in Andhra Pradesh and the sheer vision and the commitment to make things happen, I think we have amongst some few such CMs today available in India with that kind of vision. And he runs it like a CEO office, So, congratulations, sir. And I think you have seen the kind of things that you spoke about. Not many chief ministers in India are driving it that way. So thank you so much for that. And also to just pick up from what Mr. Khemka was saying, I think this is one of the crux of the challenge that we find on ground. The problem is that today we have like the renewable energy projects that we build, typically they are 25, 30 years project, whereas the financing that is existing, especially the equity capital that's coming in for those, are all short funds. So they are a 5, 7, 10 years fund. And effectively it doesn't work because the whole business model is of such nature that we are not able to get the right capital. So I think if we can sort that issue of bringing long funds which match the tenure of the projects, I think we can really scale up very fast. And we're finding that churning of assets with that short term has a very different objective, and we're not able to bring long-term capital into the thing. And to the point of the partnerships, I think there are definitely there are tougher areas where probably we can have more government and private partnerships, as well as different innovative financing models, especially for the pre-development work. The entire project developments which are happening, these are not financeable. And I can't get capital for that. We have to put our own capital to move that. And it takes a while to kind of get that. So if we can do more work in that space where we can partner with government, like say on the grid, because today, like in most of the things, the private sector is running ahead, but the grid is running behind. And so we can do the other development of our projects and other things, but if grid is not going to be there, then our projects get delayed and that capital is stuck, and then the whole performance, everything breaks off. And so I think it's very important that the entire infrastructure which needs to get done has to pace up with the commissioning of those projects. And we are finding this as one of the key bottlenecks today. Of course, a lot of work is happening, but now post the situation where individual states are also building up their own RE plans and their own green plans, I think it's very important that if we can have more stronger private partnerships in that area and look at some innovative financing models which we can get some long-term capital at government level to do such kind of development, then I think we can speed up some of the work over there, sir.
Thank you. Can I welcome Parth Jindal? He just stopped a $10 billion signing to come here. I'm kidding. But it could totally be true. But JSW Group has done amazing work in terms of so many sectors: green steel, green mobility, water stewardship, waste management. The previous panel discussed, how this is not just about doing the right thing or the good thing, but the economics of it. But, as first movers, we've seen how difficult it can be. You have unproven technologies, you have policy issues. What are the key challenges you think you've faced, you've overcome, and, where policy should take us? And then we can get Mr. Jayant and I on a policy perspective.
Yeah, thank you. Thanks for having me. I think for a country like India, the biggest challenge that we have is related to land. I think land acquisition is one of the preeminent issues across any of the industries that we are in. If I look at energy, if I look at renewable energy, I think it's the evacuation of the energy which is a very big challenge. So it's building it's not just building the project. It's actually not so. Once you have the land under your control, it's not so difficult to actually build a solar park or a wind farm. But it's actually evacuating that energy for us, which is causing the maximum amount of delay. Some of that is actually connecting your farm to the grid, which is the low voltage connections, for which you have to go through a myriad of villages. And you have to talk to each and every farmer, each and every villager, each and every village leader, because India, unlike China, which grew exponentially, is a democracy, and we can't do anything, forcefully. And the second is obviously the grid and the challenges with the grid. So that's one. Second is, as we are a developing country, no one is willing to pay a premium for green. So it is up to the manufacturers to actually make it cost effective. So today, even when I talk to we make steel, we make cement, obviously energy. But when I talk about steel and cement, even when I talk to the premium real estate developers of our country who are selling, homes in Mumbai for greater than $1,000 a square feet, even they are not willing to pay a premium for green steel or green cement. They're saying, okay, as long as you can match the price of conventional steel or conventional cement, we will give you preference. but we will not pay a premium. So, I think that's a challenge. But right now, at least, what we're seeing is that everybody, the industry, the government, is aware of the challenges. And the good news is that every year India is getting better. And when I say India is getting better, if you look at the statistics of how much renewable energy we're able to add every year, the number is on the rise. This year, India is expected to add about 37 gigawatts of renewable energy. Last year, that same number was about 31 gigawatts. So the number is on the rise. If you look at electric vehicle penetration, which is another very key area that we are focused on, it's gone from 2% last year to about 4% this year. But we have to remember that only 8% of Indian households own a car. And that's why India is a one-car household. And it will remain a one-car household for a very long period of time, maybe another decade, maybe another 2 decades. We don't quite know how quickly India will move from a one-car household to a 2-car household. So a family that's going to own one car will not own an EV unless the charging infrastructure is in place. And that's why we as a company, while we're pushing EVs in the major cities of India, in upcountry towns and cities, we believe that the right technology for India is plug-in hybrids. So it's about industry getting innovative. And obviously, capital, at least we haven't felt any challenge in getting capital. Bank finance is available, and long-term project finance is also available. Yes, on the equity side, it is difficult. We need to keep diluting. We are publicly listed, so we do a QIP, raise equity, deploy that, raise more equity, deploy that, and then hopefully you're just hoping that you have enough free cash flow to sustain more capacity addition. So.
Yeah, you're absolutely right. But it's the cost of that capital that really hurts at least the startup businesses who can't find equity, and then the cost of capital is too high. So all the issues that the industrialists mentioned border on policy. How do we do green labeling? How do we create more capacity?
Yeah, thank you, Pratibha. And first of all, let me acknowledge the wonderful comments from all the panelists, particularly the minister, who's laid out, I think, an outstanding roadmap for encouraging investment, particularly in sustainability in Andhra Pradesh. I wish all the other states follow that very excellent roadmap. Now, you're exactly right, Pratibha, that it is the job of policy to make it possible to de-risk these investments, because as we all know, and let me just reiterate that, the fuel for sustainable investments is capital. Because we really don't have a fuel that's running a solar plant or running an electric vehicle. By and large, of course, you have electricity. But the OPEX-CAPEX trade-off is so different for most of sustainability investing from fossil fuel investing that the single largest cost input into sustainability investments is actually cost of capital. And how do we reduce the cost of capital? There are two ways of doing it. One is by de-risking, because remember, risk costs money. If the risks go up, then the returns go up, requirement for returns go up. So if we de-risk, then people are willing to invest not at 18 or 20% net dollar, they'll invest at 12 or 15% net dollar. Cost of capital goes down, we get more investments going in. So de-risking is the number one lever from a policy perspective, and again, Andhra Pradesh demonstrates that very, very well. Number two, we have to introduce predictability in what we are doing. And predictability means you get paid on time, the policies are stable, and they remain in place for 20 or 30 years, so you can recoup your investments. So predictability also is extraordinarily important. So we need to do that as well. And number three, particularly if you're investing in the global south, where your currencies are subject to a lot of macroeconomic volatility, that's not in the hands of a company. That's based on your macroeconomy. Now, in India, we've done a super job on our macroeconomy. Our currency has been relatively stable. But many of the other global south countries, like an Indonesia, like a South Africa, or a Brazil, have a lot more currency volatility. The currency depreciates 4, 5, 6% a year. So if you're a global investor looking at it from a hard currency perspective, you have to factor that in. And so in domestic terms, you need to add 3, 4, 5, 6, 7% more in terms of returns so you can deliver the hard currency returns that investors are looking at. So your macro management and hedging for these kinds of currency risks becomes very, very important. You reduce that currency volatility, you provide low-cost hedging, you produce and deliver on predictability and on de-risking on things like land and the grid, as Parth and Girish have mentioned. That's when you start to see large-scale flows of capital. Now, even that's not easy. Because let's say you do de-risk everything. Let's say you reduce currency volatility. You will still find global investors, and we hear this all the time because now I'm at Eversource Capital and we're raising money and looking to global investors. People will say, if I can get 15% net investing in a data center in Virginia or investing in a solar power plant in Spain, why would I invest at 10 or 12% net in India? So it's not just that you de-risk, you reduce the cost of capital, you do all of that. If you really want the large-scale capital flow, Samir spoke about trillions of dollars, that's what's required. Jochen was very kind to say, philanthropic capital, impact investing. But there's not enough impact investment or philanthropic capital available in the world today to deal with what we need to do as far as climate and sustainability is concerned. We need commercial capital. And if you need commercial capital, that's going to be benchmarked against, giving money to Meta or Microsoft and, having them put up their big stalls here and everything else, saying, come invest in us because we're going to give you 15% dollar net. That's a hard benchmark to meet. So we need to work together. We need to think through how we can unlock those large-scale capital flows. Policy plays a very important role, but entrepreneurship and innovation, which Parth and Girish, Uday in some of his investments have also demonstrated, we need that innovation, we need that business model scaling, ecosystem scaling, so that we can actually deliver those returns. That's the only way we'll unlock those kinds of large-scale capital flows.
So, Minister, if I can come back to you based on these comments, what is that one policy change you would focus on, especially since you're looking to attract, green capital and green investments?
So basically, if you see the pump storage that has happened, I don't know about people here know about the pump storage that is done in Andhra Pradesh, which is, in the peak time. So this is generated. The pump storage is like solar plants are there. They pump it back and then they run the hydel plant in the evenings. So as you all know that in the peak time, the energy, the requirement is huge. And this was encouraged by Andhra Pradesh Chief Minister Chandrababu Naidu in 2017. So after this, now there are a lot of pump storage plants coming up in India and I think in the world also. The Greenco company that has started, now they are running it very successfully. So we encourage a lot of green energy, especially solar or windmill, all this. And we have a huge target, huge megawatts that we want to do it in Andhra Pradesh. Basically, from green energy, we want to do green ammonia, green hydrogen, all this. Even recently, before coming to Davos, we have put in a foundation stone for green ammonia. So the green energy that generates is in Rayalaseema. We want to do a corridor to the coastal where you pump the green energy for green hydrogen and green ammonia. So these are all happening, and the great thinker, as you all know, Honorable Chief Minister is a visionary, and he thinks at least 20 years ahead of time, and that is why we have all the pump storage capacities that are going to be built in India are going to be the maximum in Andhra Pradesh.
That's great to hear. Parth, if I can come back to you, since you're at the forefront of a lot of these innovative products that need to come, as the panelists have been talking about, what is that important aspect that you look at in terms of whether innovation or whether long-term sustainability? And I'm sure you work very closely with the government on all these initiatives. what is the thought process that is giving you that confidence and comfort to, you're deep into this at a time where, there is technology uncertainty, there is, storage capacity issues, and a lot of, other capital and policy issues. What is it that you look for when you're starting a project in terms of its viability and, you putting in capital?
Yeah, I think the first thing that we look at is the counterparty risk. So if you look at any renewable energy project in India, you are through SECI, which is the Government of India body. They have in many ways de-risked the payment collection process, which if you look at India's history, with the problems that the state discoms have had, that was a huge risk earlier. But now through the SECI tendering process, when you win a SECI tender, it is SECI who then liaises with the various state governments and gives you a 25-year long PPA, which is basically Government of India sovereign backed. So mentally, there is no doubt, or there is less doubt, and there is less uncertainty in collecting your money from the government, which has really helped in a long way. Now, if you look at the project side, if you look at, let's say, solar, let's say wind, you like Jayant Uncle said, you're exposed, if you're importing the raw materials, if you're importing the modules, or you're importing the polysilicon wafers, or you're importing the windmills, or you're importing the blades, then by the time you win the SECI tender to the time you implement your project, if you're importing, the input cost is not in your control. And that's where you see a lot of the projects have become unviable. Because of the competitive nature in which the bidding happens, nowadays solar tenders are going for as little as 2 rupees, and wind tenders are going for 3 rupees, right, per unit. And the maths is very, very thin. The margins are very thin. And the only way to counter this uncertainty is by localizing. And that's why, the work Suzlon has done, and the work now many others are doing on the solar side, is actually manufacturing the raw materials in India. And then you're selling power in rupees, and you're buying your raw material in rupees as well. So you're making your rupee return, which you sign up for, which for us is always a mid-teen return on equity, and low double-digit IRR project IRR is what we look at in rupees. Now that's on the wind side. That's on the renewable side. On the car side, the story is very similar. Today, if you want to scale EVs in India, you have to make the car at 13,000 to 15,000 euros. If you don't hit the 13 to 15,000 euro price point, which is 15 lakh rupees roughly, you are not going to achieve scale in the country. If you look at India, 4.5 million cars got sold in India in calendar year 25. Out of that 4.5 million, 4.2 million cars were less than 15 lakh rupees. So it's very, very less than 15,000 euros. So it's very clear that if you want to scale, you need to be at the right price in India. And again, in EVs, the biggest challenge is how much you're importing from China. Today, you look at the rupee. The rupee has depreciated. It's become 91 to the dollar. The yuan is actually appreciating. So container freight is not in your control. Today, you do your maths at $800 container freight. At 89 rupees, you end up importing at $1,200 container freight at 91 rupees, right? So the only solution again for this is to localize. And other than the cell technology, the lithium-ion cell, which today is a deeply, tightly guarded state secret of China, everything else is available in India. Our auto component industry is very evolved. They have done phenomenal work, made phenomenal advancements. But if we don't localize, then you can never be competitive. You can never make money in anything. So I think the challenge is how quickly can Indian companies localize, and how quickly can Indian companies, including JSW, I'll be the first to admit that we are part of the problem, start investing in R&D. We are very used to going to Davos, meeting a German, taking their technology, meeting a Japanese, taking their technology, going to a Chinese, taking their technology, doing incremental innovation in India, which we call Jugaad, and saying we've done R&D. But that's not R&D. So if India wants to go from a $4 trillion economy to a 10 trillion and then a $20 trillion economy, groups like Suzlon, which does much more than us, groups like ours, Tata's, Adani's, Reliance, Birla's, have to invest 2 to 3% of their turnover on R&D, and the government has to give us tax breaks for investing in R&D. So this is my
Absolutely,
push.
absolutely right. In fact, just earlier in the day, we were talking about how, in India, our budget for R&D is like some 7-8%, and China's like 20% plus. And the only way to bridge that gap is the private sector. There's only so much governments can do. So absolutely right. Indian issues, Indian solutions, and you're actually hearing firsthand from these great industrialists how they're, solving for it in India. And Mr. Danti, I want to bring you in here because, you talked about the need for long-term capital. You talked about the need for, policy initiatives. We talked earlier about in the day about green labeling, carbon credits. What if you had to send a message to Mr. Naidu, if you had to send a message to Prime Minister Modi, what is those policy changes that you require to scale even further?
Yeah, so I think, just to pick also from where Path left, I think, and I'll tell you a little bit of the experience we've had in the last 30 years in building the wind industry to a level that today, almost 85% local content is achieved. And we've been doing that for over 10 years now. And this has helped us in tough times like today, where, multipolar worlds, a lot of dynamics, things can change. You can't plan your business. So I think our founder had that vision right in the 90s that, we have to focus on R&D. I think that's what was the crux of the way when we started. And at that point in time, there was not a viable technology which in the early 90s where you could really make cost efficient. Although in the Western world, there were technologies, but the problem was, as Path mentioned, India is very sensitive to the cost side of things. And making it at a global standard, at a price point which India can afford is a very engineering challenge to really make that happen. And I think it took us almost 5 years to kind of get to that point before we saw that now we have a product, technology, a good portion of local content. We started close to about 60% then. At that time, it was almost zero in the early days. Everything was all imported. So I think it's important that you have that conviction on whatever technology you are believing that you want to make it happen. And then really you have to work hard to kind of drive that cost and efficiency. And it takes time and effort to get there. And I think R&D is the crux. I think largely we see that in India that's not the kind of large focus. And also I would say other way around that there is a little bit of lack of pride, I would say. We still tend to believe something from imported is better. I think that's very unfortunate. And I can tell you with confidence today that for the past 20 years, the kind of product we make at Suzlon, we compete with the best in the world. I mean, we've installed almost 6 gigawatts of wind turbines in 17 countries globally. And we've competed with, all the top brands. And we are at par. And also, just earlier today, we got kind of the award for being the most sustainable wind energy company in the world amongst the top 10. We got the top rank 10. So, thank you. And I think even the product that we are making, I think today the carbon intensity of a Suzlon turbine is the lowest in the world. Yeah. But that has to go at a design thinking. Then you can get it. And not just in terms of pure design, but where are you going to manufacture, which content of raw material you're going to use. So it's a whole reverse kind of thought process that you bring. So I think those are the things that we're looking at. Taking to your second question, I think, we've had ups and downs as far as carbon trading is concerned. I think we've not kind of been able to get the plot correct on that yet, but I think there's huge potential in that space. I think if we can even build a India-centric market and then collaborate with other countries, that is definitely an area where, and also our Prime Minister has kind of picked that up as a very important area, and I'm hoping, as we go along with the budgets and moving forward, this will shape up pretty well. The other two, as part of the upcoming budget, the recommendations that we've given, and I'm hopeful we'll make progress on that, is last year we had the National Mission for Manufacturing, which got announced. Not much traction we've been able to achieve in the last 1 year. I'm hoping that now we take it to the next level. And I think we have to pick up, few sectors where we believe, we can really be a meaningful player in the world. And then put all our energy into that. Today, not in many products we can say world depends on India. And that's why when you sit for your negotiation, as today it's called your pack of cards, you have nothing on your ground. And that's why you become irrelevant. And people can talk anything for you. So I think it's very important that we create that pack of cards on our side, pick those 4-5 industries, put all our muscle power on that. I think we have all the ingredients in India to make it happen. I think if we wrap that up, pick up those 3-4, and again, wind is a great example. I think the latest forecast also says that India can actually contribute 10% of the global supply chain for wind by 2030 itself, and which can go to about 20% by 2035. So we have to pick up our industries which can really deliver the modern kind of performance at a global stage, and focus us to get onto R&D and supply chain development. And also, and again, another thing, like the rare earth material, this is the other topic which comes up. I mean, because we had that day one design philosophy of making with materials which are available in India, we don't have any issues with rare earth material. It's all there. So again, fundamentally, you have to get that into your philosophy and pick up something where you want to be the global best. And I think once we have that mindset, then definitely we will see several such kind of sectors developing out of India.
And solutions which are specific to India, yes. Right?
But again, there I would just warn a little bit that while you make for a specific solution for India, but at a design philosophy, you have to make for the world. It is very important that you benchmark with the best in the world and make sure from a price and performance point you can beat them at a delivery at their doorstep. And only when you can do that, you will be able to make the best for India also.
So I'm going to create a summary of this discussion and send it to PMO, because I think they would have heard from you individually, but the power of hearing it from a panel that is discussing it together is very, very powerful. And on that note, I want you to finish your policy suggestion that you started with, but we moved on.
Actually, this discussion has triggered a very different set of synapses in my mind.
That's great.
I think the world economy is changing extremely dramatically right now, and artificial intelligence is going to change everything. I'm very optimistic about India. We've invested in a company that looks at AI human resources around the world, and the #1 generator of AI human resources will be India. We need to think about how the grid is changing. The grid is not the grid of 10 years ago. Electrons are going to be generated everywhere, stored everywhere, used everywhere. Look at the rooftop revolution, 2.5 gigs, increasing very rapidly in India, finally. So what will happen, I bet, when great groups like Jindal and Suzlon are here, and Jayant's great, and York, 5 years from now, you'll be talking about what you're doing in AI. That's what you're going to be talking about. And that's where we can kick ass right now. There's no reason why. Partially because the Americans, and I love and respect them, for whatever reason have decided to take a Long Beach holiday as far as renewable energy is concerned. And India is the great growth market. China has a distorted capital market and very low returns on capital for investors. The US is out of the game in terms of many sectors, not for every sector. And some of you are US renewables investors, thank God. There are some powerful developers and investors still in the game. And obviously data center development, now they started talking about gas as a transitional fuel again after 20 years. That was 20 years ago they were talking about that. We thought it'd be an obsolete conversation by today. Anyway, but this shift towards the digital world will transform everything. And we will be the leaders of that in our country. I would also say that if I look at our real estate operations in Bangalore, 20 years ago they were doing BPO. They were doing software services. Today, we have 400 of the Fortune 500 companies have 550 capability centers doing design. There's nothing to do with BPO. Fundamental IP design is happening in Bangalore. We are generating these people. These people with these entrepreneurs are going to change the face of India. 5 years from now, we're going to have a totally different discussion. And that's exciting because these will be digital service, energy service companies. Kraken will be seen as a small prototype for what India innovated. And that's really fun and exciting. And we'll take that to the world. One more point on geopolitics. We've had a very friendly 5,000-year-old relationship with China. I only have good feelings for China. But China is no longer considered necessarily reliable in European grids, right? Why do you want Chinese transformers in a European grid? India is still trusted. Now, I know there's some shenanigans around trade, and I don't want to comment beyond my pay grade right now. But I think it'll all settle. India is fundamentally a trustworthy country that has no geopolitical ambitions except for doing good business and trying to add value to the world. And I think the opportunity for us is endless. And, when I started my career and set up Morgan Stanley in the early 90s, we were the 17th largest economy. Today, we're the 4th. We'll be the 3rd 2 years from now. We were 25% of world GDP. In 1800, I think we're on our way back. Thanks.
Johan, if this doesn't convince you to start putting trillions of dollars in, the Indian sector, absolutely, then I don't know what else would. I realize we've run out of time. I'll give you the last word after we take a few questions. I'll have the policy makers, just give the last word, but...
Thank you for the work. Yeah. Thank you very much for the distinction of calling me a friend, Uday. May I endow the honor on you calling the green sheep in your family. And may this green sheep please take over all of the business in India. What you do is truly inspiring and truly, it warms me from the bottom of my heart. Mr. Minister, I wish you were our Minister of Finance. But there's just one small, the minister, we have two ministers, we're ex-minister. But just want to be clear, I was making lots of jokes before, but it is dead serious, right? I am in this business because we will not survive as a species. We'll have 67-meter higher sea levels. It is dead serious. And just to avoid confusion, when I say impact investing, this consists of two words. One is impact, and you would never suspect me to imply negative impact. And when I say investing, I mean above market returns. I would never say below market returns. I've never met the Yeti, and there's no such human being or institutional investors that agree a below market return. You'll never get a penny more for green, right? And so my question to you is what we discussed in the previous panel. How about we de-risk by you joining the European Free Trade Zone, including the CBAM around the UK and New Zealand and Australia, and then at 200 euros a ton for carbon credit, you have part of your revenue streams are carbon credits that doesn't matter what your currency does. And as far as decentralization is concerned, why don't we work together with Europe and India and create an Indian, European clean industrialization fund, which leapfrogs the Chinese. We have a technology that produces green hydrogen for your steel factories at $3 a kilogram, at the level of methane from waste. We have a technology making super thin wafers for space at half the cost of the Chinese with twice the efficiency. So we love the Chinese, the whole world, but let's team up. What do you think about the carbon tax and dividend in a joint free trade zone? And what would be the level of carbon price that you think would work on condition that the charge is returned to the citizen, right? If you charge 200, each citizen gets 200 euros a month. What would be the level? And where do you see his perspective of working between the EU and India?
Mr. Sinha, can I get you to respond to that?
Thank you, Jochen. And we discussed it, as you know, a little bit in the previous panel as well. There are various mechanisms that have been proposed, which are all economically feasible. The challenge is that they are not politically feasible. And the reason is very simple. You won't get voters in the global north saying that our money is going to go to poor people in Nigeria or Bangladesh or Indonesia or India for that matter, right? So I wish we had that universality, and that people would have the economic sense to understand that if I want to mitigate carbon, that if I'm investing, whatever thousands and thousands of dollars or euros in Germany, I could do it as you were giving the example of the lady in Africa who could mitigate the same amount of carbon with, not thousands of euros, but in tens of euros, right? So economically, it makes perfect sense. Economically, it's feasible to design these mechanisms where capital would come from the north to the south. Politically, it's very difficult to pull it off. And that's why I think all of us have a very heavy burden of responsibility, that we have to build the enthusiasm and the excitement, particularly in the global north, so that because, in fact, you've put the carbon in the atmosphere, that you are willing to now pay for either mitigating it or actually through regeneration, taking it out of the atmosphere. So that moral responsibility, which of course was part of the whole UN Paris Agreement, common but differentiated responsibilities, is in fact accepted in the global north and happens. The current world environment and the discussion we were having earlier about the orange man is not moving in that direction. But I think that is the responsibility we all face of really continuously bringing up this set of issues.
Yeah, I think, and I would just like to add there that, we mustn't give up. And I think if we can even get one leader to start talking for that collaboration from the Northern Hemisphere, I think South is ready. So I think we just need to make that dialogue happen. And I think rest will then start, going from there.
That's why these gentlemen are here at Davos.
Yeah, I'll just add, I think geopolitics is driving Europe and India closer. We have shared values, and you can understand what I mean by that. However, in addition to that, my point about China, so our group is exporting renewable energy infrastructure like your group is. We're on the electronic side, you're into Europe. And we're doing it right now. And we're doing it very successfully. And the reason is Europeans are not competing against the Europeans. They're competing against Chinese. We're competing against Chinese. They don't want the Chinese equipment in their grids. So that means that Europe becomes a natural partner to India, even without the more complex CBAM plus, even with a simple trade agreement that prioritizes a verticalization of an industrial trade corridor and perhaps some innovation together where we have tons of engineers that can work with you, we can create a more limited cooperative pathway that may not have some of the same problems about fiscal transfer.
And I'll give you an example. I mean, in wind energy, when we started in the early 90s, almost that time, in fact, China was not in the picture. In fact, some of the Western players and ourselves, we set up plants in China and taught them how to make windmills, and the story is different now. But when we started, almost the entire technology and production and everything was in Europe. Yeah. So when we worked with several of our sub-supplier systems over here and convinced them to come to India, we also set up industrial zones as a group to get all the ancillaries to come there and make in India. The ones that really agreed to do that, because this was purely private to private, no government involved at that time. So the ones which risks and took that deal that, okay, I want to go to India and start my manufacturing. Today, actually, those companies are surviving because of that decision against the Chinese. And they are exporting, they are making whatever they are producing in India, hardly 20% they are selling in India. I mean, I have 2 gearbox companies, world's top 2, making wind turbine gearbox, largest capacity in India, selling to the world. That's how they are surviving today. Generators, control systems, all of them. So even purely from a approach, I think we must not give up. And I think if we keep trying, if we get one political leader to kind of work with starting up that system, I think convincing India we are ready, so we can make it happen.
Yeah. Meanwhile, Parth is sitting there saying, I'm localizing everything, so. But any last words, Mr. Bharat, Parth? I know there are a lot of nightcaps going across the town here, so I would like to wrap it up with last words from you.
Last words, I would say, if you want speed, choose Andhra Pradesh. Because that's the only thing. I mean, if you see in last 18 months, in terms of the investment in US dollars, it is more than $120 billion worth of investments are committed or coming in just 18 months to Andhra Pradesh. So the best thing that happened is the speed. We are giving approvals just compared to any other states. It's on war foot basis. You discuss, it's done. So we are not concentrating on MOUs. We want the companies to come and set up there, and we are getting it grounded. That's the speed that we are working.
Yeah, and I think I have first-hand experience of that in the state. I think amongst the states we worked, it's jet speed. And you don't feel like you are talking to a political group. They run it like a CEO office. So congratulations, sir.
Thank you so much. A big applause to all the gentlemen here. The testosterons were kept low. And this is billions of dollars of time right here. So I really, really appreciate you taking out the time this late in the evening. Thank you very much. Sorry for overrunning the panel. Have a photo.
Thank you very much to Eversource Capital for your sponsorship, your engagement. We're so glad you're here. In the lobby, we have some refreshments for this audience in the back right corner. So please stay a while and enjoy. Thank you.